$4 million. dollars. That is the amount of money that I was just offered from somebody to buy my firm. Now, why are they offering me $4 million? dollars? And it's not for a course, not for a program, not for some technology. It's literally for my tax advisory practice that I just built in the last 4 years. So in 4 years, $4 million. dollars. Now, most tax professionals are not thinking this way about selling their business or putting it on the market, and neither was I. Somebody approached me and said, David, are you interested? I said, let's see what you got. Now, little did I know that in this discovery phase and learning about this process, that I would pick up so much information about not only my firm, but the industry in general and how it's transforming and what you need to know if you're a small or medium or large practice owner, if you're somebody who's been in the industry for 1 year or 20 or 30 years. Today, what I'm going to be breaking down is how to see the industry today from the lens of a buyer. You see, today more than ever, enterprise value is important, and I want to help you get the best and the most out of it and hopefully see this business in a different light. Now, my name is David A. Bettis. I am a tax business owner. I've owned a practice for the last 17 years. In fact, I started as a tax preparer, just working my way up, opened one office, two offices, and so on and so forth. And over the next 12 years, I grew one of the largest tax preparation businesses in the state of Texas. We had prepared over 50,000 tax returns in the first 12 years. And then I realized I had done it all wrong. You see, I built a practice that had me as a slave to a client and to a desk. I was overworked, underpaid, and I was always stressed out and burned out. The last 5 years of my career, I focused primarily on tax advisory when I found out that you could get paid more and not do as much work. And over the last 4 years, I focused on that and built a now $4 million valued tax business. Let's be real. Most firm owners are not thinking about the enterprise value or the sales price of their firms. And it's really easy to forget about these things, especially when you're optimizing for cash flow, when you have partners and you have a team. But in the process of building a business, sometimes we neglect to manage or to maximize the things that are the most important, which in this case would be enterprise value. Now, enterprise value is defined by the valuation of a business when it goes up to sale. If you're thinking about selling either in the near future or in the way future, it doesn't matter. You always have to be considering this. Now, I want you to know that most firm owners today do not have an exit strategy. They're sitting around thinking, man, one day my children will take over this business, or I'll find somebody who can be my steward or an apprentice. And that's a good thought, but that's not really being strategic. And for being somebody who's so skilled and knowledgeable, specifically a tax or a CPA, you're probably underselling yourself and you're actually lying to yourself by saying, oh, yeah, I could just find somebody to take over. We don't want to just think that it's going to happen. Let's make it happen. Now, the industry has changed significantly since I got in 17 years ago. But let's talk about how people see the industry and who's in the industry. So, first and foremost, there's obviously solo practitioners that are the majority of this industry. That's a single CPA who opens a small business, maybe hires one or two or three in people, and maybe the revenues are 500,000 to 1 million. Then there's those multi partner businesses that typically operate in the 2 to 5 million space, and they do good work and that's who they are. And then they have the big players, $5 million and above, maybe even 50 or 100 million could be designated as those. And to those guys, let's not even get into that. We could cite some of those things, but I want to focus on firms usually below 10 million because this will give you a census of what to do. So if you're in the business right now and you want to know how much your firm is worth, I'll give you some metrics. If you're thinking about selling today, most firms, if under $2 million, are selling for about 9.9 to 1.2 of gross revenue. So as an example, you could sell your $1 million gross revenue practice for 900,000. Now, when you exceed 2 million, you fall into a different category, which now becomes what we call the EBITDA category, which means that the net profits are calculating your value. And so what you do at that point is you take a multiple of your net profits to calculate your value. So as an example, if the net value of your or the net income of your business is 500,000, well then you get a multiple of that. Now at 500,000, most firms right now are trading between a 3 and a 10 multiple. So what that means is at a 10, you could get 10 times your EBITDA, but that's very rare that's going to happen. And I'll show you how to make it more valuable in just a minute, but that's very rare. And in fact, to get to the 10, you have to be at the $10 million mark. To get to let's call it a 4, you've got to be at the $1 million mark. And this is what most firms are going through. They're looking at their valuation from EBITDA or gross revenue. Either way, most people can't agree upon what they want to sell their firm for. But that's really what's going on in the marketplace. You've got this EBITDA valuation, you've got this net or gross sales valuation, but either of those will work and they apply to you. So let's talk about the buyers who use those multiples, because today it's a seller's market. So buyers are the ones that have to come to you with the price they want to pay. And you want to get the most maximum value, but who are the buyers? So there's two different types of buyers in the market today. There are the peer-to-peer buyers. Those are the people that you probably already work with. There are other CPAs or accounting firms who are looking to acquire market share or to expand into a specific market. And those are strategic moves typically done with well-established accountants. And that probably is something that you would be considering, because you definitely want to have the benefit of that. And I'll talk about the benefits in a minute. Then there's these private equity firms, which is just money and capital coming from outside sources. And these private equity firms are coming in to purchase firms, typically for high cash value or high returns. And so those are your two buyers. You got this group of investors, which we call private equity, and we have these peers who you could come in and buy from you. Now, both have their benefits. I'll give you some examples. Uh, Peer group could come in and take on your clients, would probably be less change oriented and more customer oriented. They'd be more willing to be flexible with your clients and technology, and they would probably want to work with you at a deeper level in the transition period. And that's typically what a peer to peer sale looks like. Whereas private equity is probably going to come in and change things. They're going to make rapid change to increase value. They're probably not going to be so customer centric, more revenue centric, and they're going to probably require that you work a little bit of time in order to earn out maybe some of the money. You see, peer to peer possibly could pay you all in cash. Private equity could do the same, but typically have contingencies or requirements because they need you. The peer group would work your firm, the PE group would need you to work the firm. That's what happens in these things. And so these are your two buyers in the marketplace today. And by identifying which buyer you want to sell to could determine how you position your business to sell. So let's talk about what makes your firm more valuable. So maybe you're in a position right now where you're thinking, well, I want to consider selling, or I want to position for the sale. And by the way, it's not even optional anymore. It's a requirement. But let's talk about that. Number one, if a firm has a high amount of monthly recurring revenue, you have a high valuation. So for an example, let's say you're doing $1 million in revenue, and 1 million of that comes from fees for bookkeeping, compliance type services, maybe it's a little bit of advisory. And let's say that the customers are on a subscription base. And every month you're receiving, let's call it 100,000 or 80,000 or 70,000 in recurring revenue. The more recurring revenue in a percentage of your revenue that you have, the more valuable your firm is. That's the first thing they look at. Number two, to make a firm more valuable, they want to look at processes, structure, systems. Are you systematized? Because when somebody purchases your firm, they don't want to walk into chaos. They want to walk into a system that's functioning, that's moving, that's orderly. And that means having SOPs, that means having good technology in place that makes things automated. Super important. To move to the next one, and number three, the more automated in systems you are, by the way, the more margins you have. 30% margins are typically what they're looking for, or greater margins. That's really what supports the purchase. If you have 30% or greater, you've got this. The next one, number four, is a very important one, which is a key risk to every business, which is key man risk. And what firms are looking for, or acquirers are looking for, they're looking for firms that are not dependent upon the person that runs the business. Meaning they want to be able to say that if you're not there, the business will continue to run. And that's very hard for most small business owners, especially small firm owners who don't have a huge team. They constantly meet with clients, they're part of the deliverables and fulfillment. So you have to think about, how do I get myself out of this problem, right? How do I get myself out of those things? And lastly, technology driven, AI driven. That's a huge bonus right now. It's a buzzword in the industry in general, but if you want to get the highest valuations, think about how you can maximize CRMs, chat GPTs, if you will, technology to be able to systematize everything in your business. The more systems that you purchase, or that you produce rather, and the more technology you have, the more likely you're going to get a higher multiple on valuation. I would encourage you to think about advisory as one of your main product mixes. See, what I like about advisory and what buyers like about advisory is that it has high margins, it has high retention, meaning clients stay and pay, and it really is the backbone of what we would call a client journey. You see, most tax professionals work with clients on compliance type work, and that becomes transactional. We want to be transformational. And that's why in my firm, when we're just completely tax advisory, our $4 million evaluation or valuation to purchase is primarily driven because of advisory. It's a huge driver of our business, and that's what they're valuing our firm at. So, no matter where you are in the journey, even if you're starting out or you're coming into this senior, been around 20 years, selling your firm should always be in your radar. You should be thinking about this. You should be considering this. With private equity moving into the market so much, last year alone, private equity bought 73% of all transactions in this marketplace. That should tell you they're coming in harder and they're coming in heavier. If you want to be bought by a PE firm, you've got to position yourself with the right product mix, with the right MRR, the right margins, the right technology, and you got to take yourself out of the equation. But whatever you want to do, whoever you want to sell to, rather, I would encourage you to really think about this as a serious thought moving forward. Position yourself for sale, right? Let's make your business more valuable by offering the right services and doing the right things. My decision not to sell my firm at this time has been a big one for me because I'm turning down a lot of money, but knowing that there's a bigger payday in the future and knowing that I'm very valuable at this point and allows me to identify what I need to focus on now to become even more valuable in the next few years. And who knows, maybe I sell it for 40 million in the next 5 years. Wouldn't that be something? So, hope you love this content. And if you want to see more of this, please hit the subscribe button. If you're a tax professional or somebody who pays taxes and you want to know more about this industry or you want to help with tax strategies, please just click on the subscribe button down below. I want to see you on our next video, and thank you for watching.